pricing a home accurately in today's real estate market is the difference between finding success within those first few weeks versus taking months to sell and likely for much less. In today's market, values are slowly declining. The longer that a seller takes to properly price their home and secure a successful outcome, the more money they will ultimately end up losing. Stay tuned for the latest in the Orange County housing market. What is going on? Thank you for tuning in and welcome back to another Orange County housing market update. My name is Garrett Gahn and I am the host of YouTube's Living in OC. I'm a Southern California real estate agent, and whether you are looking to buy, sell, relocate, or just know all there is to know about living in Orange County, California, you've definitely come to the right place. So as mentioned in today's video, we're going in depth into the current state of the Orange County housing market. Let's jump right into it. One of the most crucial steps for selling your home quickly and for the highest possible net proceeds in today's market is to carefully arrive at the home's fair market value. In every price range, homes are sitting for much longer, and it's leaving sellers wondering what they are doing wrong. 37% of all the homes on the market in Orange County have been on the market for over 2 months, and we've seen about 44% of homes reduce their asking price at least one time. Now, due to this higher interest rate environment, we are seeing the market lining up more in favor towards the buyers during negotiations. Buyers now certainly do not want to overpay, and they're just simply unwilling to stretch. Accurately pricing is just fundamental regardless of the temperature of the current housing market, but especially in a declining market like we're now seeing. Throwing a price out there just to test the market is certainly not going to be a wise strategy, and it's definitely something that your realtor should not be advising you to do. Take a look at this chart for last month. The data is staggering in looking at the sales price to the original list price. This is the price when a home initially comes on the market prior to any price reductions. For homes that reduce the asking price between 1 to 4%, the sales to original list price ratio was 94.7%. For example, a home that was listed originally for $1,056,000 had to reduce their asking price to $1 million to find success. Homes that reduced their asking price by at least 5% had a sales to original list price ratio of 86.7%. A home that was originally listed at $1,153,000 had to reduce their asking price, often more than once, to $1 million to find success. So again, just as a warning to you sellers out there, overpricing a home risk valuable market time, as well as obtaining a smaller net proceeds check at the close of escrow, and it could very easily result in chasing a declining market. My advice would be to pull the emotion out of the process when arriving at your asking price. Instead, carefully and methodically isolate the fair market value to achieve the best outcome and for the most amount of money. Now, moving on and taking a look at the current active inventory in Orange County, we decreased by 96 homes, down 3%, and now sits at 3,581, its lowest level since June. It was the largest 2-week drop since the very start of September. With the holiday market fast approaching, next week through the first couple of weeks of the new year, the inventory is finally starting to behave normally and is starting its seasonal drop. It normally drops during the autumn months, but until the past couple of weeks, this year has been far from normal due to the high interest rate environment, extreme impact on the demand. Shifting over and taking a look at the current demand, which remember is a snapshot of the number of new escrows over the prior month, we have declined from 1,270 to 1,202 in the past couple of weeks, shedding 68 pending sales or down 5%. It was the smallest 2-week drop since September 1st, indicating that demand has finally caught up to the swiftly rising mortgage rate environment. Yet these are the lowest demand readings for this time of year since tracking began back in 2004, slightly lower than the start of the Great Recession in 2007. Demand has only been lower during the initial pandemic lockdown in April of 2020. Now, according to Mortgage News Daily, mortgage rates have dropped from 7.22% on November 9th to 6.65% today due to the Consumer Price Index falling more than expected. That's down by more than 0.5%. If inflation continues to fall, rates will fall along with it. And ultimately, demand will start to increase as more buyers will qualify to purchase. The next CPI, or Consumer Price Index, reading is in mid-December, so definitely stay tuned for that. For the remainder of the year, though, expect demand to continue to fall along with the inventory. Lastly, I'll go ahead and leave you with this graph. This will illustrate the activity of specific price points. So go ahead and take a look at the price point you are either looking to purchase or sell in for a better understanding of what to expect in today's market here in Orange County. And that is it for this month's Orange County housing market update. Be sure to subscribe and stay tuned to see how the market continues to move and shift. Make sure to reach out to me directly or leave a comment down below with any questions that you have about the Orange County housing market or just what it's like to live here in Orange County. This is what I do, and I would love to hear from you. And lastly, if you did find any value in today's video, please hit that thumbs up button for me. It helps me out tremendously. And like I said, definitely consider subscribing. I am dropping multiple videos a week for all things living in Orange County, California. Thanks again, and see you in the next video.